Well, my next guest sees the pieces are in place, in his opinion, for a year in rally. So let's bring in Aquinas, Wealth Advisors President, CEO, Chris McMahon. All right, Chris, first let's talk about the Federal Reserve here, because, the balance sheet, you think the QT is over.
It's over. Isn't this good? It's going to be a tailwind now, right? $2.4 trillion they took out of the marketplace since 2021. It's time. Japan also started some easing as well. I think there's some easing in the future for us in the U.S. These are good tailwinds.
So folks see the QT is over. What comes after that is QE. I mean, is it too early to start talking about that?
I think we're going to see a couple of rate cuts first, and I think that's going to drive us through the first 6 months, and I'm as optimistic, I think, as you are with this thing. But I think we'll see that easing, that could take us into the first quarter of 27, because I think it's probably that third and fourth quarter of 26 we're going to start to see.
Of course, the purists go back to a time when we didn't even have $1 trillion on the balance sheet. And ever since then, they say, you know what, we're on the path to total economic destruction at some point. Why is it good for the market?
I think consumers are taking this market over. I think the pundits on Wall Street have had their say. They've been negative for 2 years. They've been talking about deflation, the balloon deflating. And the reality is consumers aren't seeing that. We saw it in Black Friday spending. We saw it in a lot of places. I think the consumers driving this, net worths that are all-time highs in this country.
Right. I'm going to bring up a chart here. This
Absolutely.
is Fed funds rates. We want to get past that because I've already asked about that. I want to talk about the wealth effect that you brought up, because we've got a chart here that will illustrate this. Household net worth, absolutely phenomenal. Now, here's it feels like a virtuous cycle. The more the market goes up, the greater, household net worth goes up. The more household net worth goes up, it seems like the greater the stock market goes up because people are spending. Now, some say if there's any hiccup in this, maybe a market pullback, and then this disrupts. It's a positive feedback loop now, but could it ever be a negative feedback loop?
It certainly could get us in a negative trajectory, but I think what we're going to see is more like what we saw in April. Significant market drawbacks, but that optimism pushes us right back. I think this is a great opportunity to invest in equities. And think about it, the broad markets, let's take the Magnificent Seven out of it. We've got tremendous opportunity in a couple of the Mag 7 stocks, but also in the broader market in general.
All right, so we got optimism, we've got the Federal Reserve, an accommodative Fed. Now let's just talk the market, right? Obviously, everyone, we broke under the 50 a couple of weeks ago. It was all hell. We're going to go down, test the 200-day. It was ugly. We're back above it. For me, though, I think some of this trepidation right now is just a breakout. Honestly, I feel like if we break out, let's say next week to new highs, that will spark a year-end rally.
I think we're going to see that Santa rally for sure, just on exactly what you're talking about. People are ready for it, and there's still cash on the sidelines. They've put that cash to work before the end of the year. I think we can have another 3 or 4%. I mean, you saw Deutsche Bank. They said, 15% or 12% in the Dow next year? That leaves us another 3-4% this year.
So for folks who say, okay, the S&P was up more than 20% the prior 2 years, maybe if we get a year-end rally, 19-20% this year, sure. It's too much too soon. Chris, it's too much. We got to pull back.
I'm not going to use the word new paradigm because every time we do that, there's a horrible crash. But I think we're still in a cycle of growth. And that cycle has at least, in my opinion, 9 months to run. All
right, let's talk about where we make money. Amazon, again, I had a guest yesterday saying that this has sort of become the sort of stepchild in the Mag 7 area. For a couple of years, it's been suggested maybe they should spin off their consumer part. I was in Vegas. They had a big event in Vegas this week.
Yes.
Phenomenal. AWS. It was huge. It was the excitement. You think that's a great place right now?
Think about it. The partnership they made with Claude is going to drive AWS to new heights. And as people get more comfortable, we're going to see this thing take off. That retail business, the largest retail business in the world, has been lagging behind. It's time for that to hit the gas.
Palo Alto Network, we always talk cybersecurity. Why this and not CrowdStrike?
Simple. They got $30 billion they spent this year on acquisitions. $30 billion. And what we think is going to happen, we think we're going to see people saying, I don't want to go to multiple vendors anymore. I want to go one place for web security. They're going to go to Palo Alto.
For years, I have 4 stocks you never sell. I told my subscribers, don't ever sell these. Boeing was on the list. You have Boeing and Airbus sharing all of the growth in airlines, around the world for 20 years. It was the ultimate duopoly. And of course, they had a series of crashes, a series of mistakes, messaging mistakes, and the stock does not seem to be able to lift off, pun intended.
737s are back to 42. These are my 2 big picks for the end of the year. I'm saying Boeing stock, and I'm saying IU is going to be the number one team in the country. Those are my 2 big picks.
1 out of 2 might not be bad. All right, Merry Christmas, my friend.
Thank you, sir.
Thanks a lot.